Have you ever wondered how to start investing? Welcome to the world where money works for you, where your hard-earned cash can multiply without your physical labor. Investing is not some complicated science known only to Wall Street wizards. It's a skill that anyone can learn, and with the right knowledge and discipline, you can start investing too. When we talk about investing, we're essentially talking about putting your money to work for you. Instead of keeping your savings idle in a bank account, investing allows you to grow your wealth over time. Think of it as planting a seed. With the right care, that seed can grow into a tree that bears fruit year after year. Investing is not just about earning extra income. It's about securing your financial future. It's about making sure that you have enough when you retire, or that you can afford that dream house or car you've always wanted. It's about creating a safety net for unforeseen circumstances, and it's about passing wealth on to the next generation. The benefits of investing are numerous, but perhaps the most important one is the power of compounding. Simply put, compounding is the process by which the earnings on your investments are reinvested, and over time, these earnings generate their own earnings. It's like a snowball rolling down a hill, gathering more and more snow as it goes along. But, like any journey, the journey to financial independence through investing starts with a single step. It begins with understanding the basics, setting your financial goals, choosing the right investment strategy, and finally, taking the plunge and making your first investment. Investing is a marathon, not a sprint. It requires patience, discipline, and a willingness to learn. But the rewards can be substantial. Over time, investing can provide you with a source of passive income, help you build wealth, and ultimately, achieve your financial goals. So, ready to dive into the world of investing? Let's begin. Investing starts with understanding the basics. At its core, investing is about putting your money to work for you. It's about purchasing assets today with the expectation that they will grow in value over time, providing you with a return on your investment. One of the fundamental concepts you need to understand is the idea of assets. Assets are things of value that you can invest in. The most common types of assets are stocks, bonds, and mutual funds. Stocks represent a piece of ownership in a company. When you buy a stock, you're buying a small piece of that company. If the company does well, the value of your stock may increase, and you could sell it for a profit. Bonds, on the other hand, are essentially loans that you give to a company or government. In exchange for your loan, the borrower promises to pay you back with interest. Bonds are generally considered less risky than stocks, but they also typically offer lower returns. Mutual funds are a collection of stocks, bonds, or other assets. When you buy a share of a mutual fund, you're essentially buying a small piece of each asset in that fund. Mutual funds can be a good way to diversify your investments, which can help to spread out your risk. Speaking of risk, it's important to understand that all investments come with some level of risk. The potential for higher returns often comes with a higher level of risk. This is known as the risk-return trade-off. It's crucial to assess your own tolerance for risk when considering different investment options. Investing also involves understanding the power of compounding. This is the process where the return on your investments is reinvested and in turn, generates its own return. Over time, compounding can significantly increase the value of your investments. Now that you know the basics, you're ready to learn how to start investing. Before you start investing, it's important to set your financial goals. Now you might ask, why is this so crucial? Well, it's simple. Your financial goals are the driving force behind your investment decisions. They are your roadmap, guiding you on the journey to financial success. Think about it. What do you want your money to do for you? Maybe you're planning for a comfortable retirement, yearning to buy your dream house. Or perhaps you're nurturing the seed of a business idea, waiting to bloom. Whatever your dream, it's essential to set a clear and achievable financial target. Setting these goals helps you determine the amount of risk you're willing to take, the type of investments you'll make, and the time you're ready to commit. It's like having a compass in the wilderness of investment opportunities. Remember, the clearer your financial goals, the better you can plan and strategize. With clear financial goals, you can choose the right investment strategy. Now that you have your financial goals, it's time to choose the right investment strategy. Choosing the right strategy is like picking the right tool for the job. Some tools are better suited for certain tasks, just as some investment strategies are better suited for specific financial goals. Let's start with value investing. This strategy involves seeking out stocks that appear to be undervalued by the market. In other words, you're looking for hidden gems, stocks that are selling for less than they're truly worth. This strategy requires patience and a keen eye for detail, but it can pay off handsomely if you're willing to do your homework. On the other hand, growth investing is all about finding companies that are poised for rapid expansion. These are the high flyers, the companies that are disrupting industries and creating new markets. The goal here is to ride the wave of growth and sell when the price peaks. However, with potential high returns comes higher risk. It's essential to understand that not all growth companies will succeed. Then, there's income investing. This strategy is for those who want a steady stream of income from their investments. It involves buying securities that regularly pay dividends or interest. This strategy is particularly attractive for retirees or those nearing retirement who need a reliable income source. So, how do you choose the right strategy? Well, it depends on your financial goals and your risk tolerance. If you're young and have time to recover from potential losses, you might lean towards growth investing. If you're closer to retirement and need reliable income investing might be more your speed. And if you enjoy digging into financial statements and unearthing undervalued stocks, value investing could be a good fit. Remember though, that these aren't hard and fast rules. You can and should adjust your strategy as your financial situation and goals evolve. And it's always a good idea to diversify your portfolio, not putting all your eggs in one basket. Choosing the right investment strategy is crucial to achieving your financial goals. So, take some time, do your research, and choose wisely. Your future self will thank you. Now that you have your investment strategy, it's time to get started with investing. The first step is to open an investment account. This is where you'll store and manage your investments. It's like a bank account, but instead of money, it holds your investments. You can open an investment account with a bank, a brokerage firm, or an online platform. The choice depends on your comfort level, convenience, and the services offered. Once your account is open, it's time to buy some investments. This process is similar to shopping online. You search for the investment you want, whether it's a stock, a bond, or a mutual fund, then you add it to your cart and check out. Remember, each investment carries a different level of risk and potential return, so choose wisely. Selling investments is just as easy. When you feel it's the right time to sell, you simply navigate to your portfolio, select the investment you want to sell, and complete the transaction. The proceeds will then be deposited into your investment account. Monitoring your investments is an ongoing task. It's like taking care of a garden. You need to regularly check on your investments to see how they're doing. Are they growing? Are they struggling? Do you need to make any adjustments? This will help you stay on top of your financial goals and make informed decisions. Now, let's talk about diversification. This is the practice of spreading your investments across different types of assets to reduce risk. Imagine if you put all your eggs in one basket and that basket falls. You'd lose all your eggs. But if you spread your eggs across several baskets and one falls, you still have eggs in the other baskets. Diversification works the same way in investing. Regular investment is another important aspect. It's like regular exercise. The more consistent you are, the better results you'll see. Whether it's every week, every month, or every quarter, make a plan to regularly add to your investments. With these steps, you're ready to start your investing journey. So, to summarize everything we've discussed today, let's recap some vital points. We started by understanding the basics of investing, which involved knowing different asset classes and the power of compound interest. This knowledge is the foundation of your investment journey. Then we moved on to setting your financial goals. Remember, your goals dictate your investment strategy, so be clear about what you want to achieve. Next, we discussed choosing the right investment strategy. Whether it's a conservative approach with bonds or an aggressive one with stocks, your strategy should align with your financial goals and risk tolerance. Finally, we explored how to get started with investing. From opening a brokerage account to making your first investment, it's all about taking that initial step. Remember, investing is a journey, not a destination, and with the right knowledge, you can start that journey today.